Governor, with the recent announcement from the central bank to reduce the vehicle purchasing loan rates, with this, it increases the upfront payment burden. So my question is, what is the practicality of this move, especially for the commoners seeking financial assistance to buy a vehicle?
So here the loan-to-value ratio is an instrument that is what we call macroprudential instrument, which is to basically have a sustainable level of borrowing by individuals, whatever the loan they take. For example, any loan product, usually the housing loans, several loans, there are certain level of loan-to-value ratios as a macroprudential policy. Motor vehicles, because we had this ban on imports for last 4-5 years, we still didn't want to change the existing the ratios that we had earlier because there's no import coming. As a result, we didn't have need to revise that. But now, especially with the new Central Bank Act, this has been basically recognized as a macroprudential instrument. And for that, now we basically trying to use that instrument properly for macroprudential purposes, which is to have a sustainable amount of borrowing by the borrower, especially the people who are borrowing for vehicles. Earlier, there was a distortion in terms of electric vehicle different ratio, local manufactured one different ratio. Likewise, this is not the purpose. So, for if any incentives to be given to certain category of vehicles, it has to come from the taxation. That's why you see different taxation for EVs and other cars. That is the instrument for financial stability point of view and macroprudential point of view. This is the instrument that we are trying to address certain kind of anomaly or distortions across the sectors, like EVs 90%, other ones 50%. That's why this decision is to move towards a more kind of a macroprudential instrument and address. Reduce the distortion across the certain sectors. So, which commercial vehicles can have a higher LTV, mainly because of the cash flow and earnings are higher when this is used for commercial purposes. But personal vehicles, I think I'm sure 70% loan and 30% equity is a reasonable rate for any borrower, for them to be able to service their loans, especially when they buy a motor vehicle, because here when it comes to motor vehicle, there's a risk that value of motor vehicles can come down over a period of time. Brand new vehicle may be lower the value, so if you get 90%, if that comes down to 80% of the value, there's a risk for the financial institution that there's no incentive for them to continue to service this loan because value is lower than what the loan that's taken. That is a macroprudential instrument. So we are now addressing that concern and having a much more consistent ratios across other sectors. That's the purpose of this revising this time, because I was just starting the vehicles coming up, and we didn't want to have a different ratios applicable to different sectors other than the commercial versus personal vehicles. And that's one of the reasons why three-wheelers also increased from 25% to 50%. At some point, gradually, I think we're trying to move into a much more consistent ratio based on the risk factor. That's the whole idea.